Welcome to the Daily AI News Digest for July 1st, 2026. I'm your host, and this explainer is brought to you by bestai.org. Over the past 24 hours, we've seen a fundamental shift in the global AI ecosystem, one where sovereign oversight is directly colliding with commercial software. Let's get right into today's market realities. On the agenda today, we'll start with the biggest market moves, then look at product and model realities, followed by regulation and business signals, and wrap up with the analyst take. Starting right off with Section 1, the biggest moves today. The primary headline crossing our desks today is the resolution of a fairly unprecedented regulatory standoff. If you recall, back on June 9th, Anthropic launched Claude Fable 5 and Mythos 5. Just 3 days later, on June 12th, the U.S. Department of Commerce stepped in with a strict export control directive, citing national security concerns. Well, fast forward to today, June 30th, and those restrictions have actually been lifted following some intense collaboration on updated safety classifiers. Global access to those models is now officially restored. Meanwhile, Google is dealing with some significant operational headwinds. Our sources confirm that 4 senior researchers from the Gemini team just left for rival Anthropic, all within a single week. Now, obviously, a company of Alphabet's sheer scale can absorb individual departures, but this kind of visible talent drain, happening right as public product deadlines are slipping, well, it's a material signal. It's something developers are closely watching as they evaluate their long-term platform bets. Moving on to Section 2, let's break down the latest product and model realities. Right now, we're looking at some very stark contrasts in how the major labs are deploying their frontier models. OpenAI is keeping GPT-5.6 Sol heavily gated. We're talking restricted access to roughly 20 government-vetted partners. Google, as we noted, has officially delayed Gemini 3.5 Pro until July. Anthropic, on the other hand, is taking the exact opposite approach, pushing Claude Sonnet 5 straight into immediate general availability. If we analyze that maneuver by Anthropic a bit more closely, launching Claude Sonnet 5 is really a deliberate enterprise cost control mechanism. Back in the second quarter, enterprises essentially recoiled from their agentic AI bills, as those extended autonomous tasks were just burning through annual budgets in a matter of weeks. By deploying Sonnet 5, which has near flagship agentic capabilities, at an introductory price of $2 per million input tokens and $10 per million output, Anthropic is directly targeting the unit economics of enterprise AI. It's a calculated attempt to prove that long-horizon automation can actually be financially viable at scale. Circling back to Google's product execution, that delay of Gemini 3.5 Pro is rooted in a very specific technical reality. The company cited the need to address feedback from early testers regarding excessive token consumption during extended tasks. Ultimately, delaying a model with documented performance issues is just a sound operational decision. To bridge that gap, Google is heavily relying on Gemini 3.5 Flash. It's a lower-tier model, but it's highly capable, currently live and scoring 78.4% on the OS World Computer Use benchmark. It's demonstrating a strong capacity for automated desktop control, but at a fraction of the compute cost. Over at OpenAI, the focus is squarely on structural hardware advantages. For that gated GPT-5.6 Sol model we mentioned, they're targeting deployment on Cerebras wafer-scale hardware. And they're hitting benchmark metrics of up to 750 tokens per second. To put that number into perspective for you, standard GPU-based serving runs at about 50 tokens per second. That is a 15x increase, and it completely alters the reality for latency-bound workflows. It's the kind of speed that enables seamless, real-time interactive voice applications and instant feedback loops in coding environments. Turning to Section 3, Regulation and Business Signals. The cold business reality of frontier AI development is defined by the sheer scale of compute capital required. Case in point, Alphabet just closed a record-breaking $84.75 billion infrastructure equity raise. Notably, this includes a massive $10 billion anchor investment from Berkshire Hathaway. This stands as the largest AI infrastructure financing in corporate history, and it underscores the immense financial reserves you need to even compete in the current model training cycle. And those massive capital requirements are seriously accelerating the pressure on private AI companies to tap into the public markets. The 2026 IPO window is highly active right now. Following SpaceX's successful listing in June, OpenAI is targeting a September debut, and Anthropic is right behind them, targeting October. This upcoming quarter is going to require these firms to unequivocally demonstrate sound unit economics and reliable revenue scaling if they want to justify those extraordinary pre-IPO valuations. On the policy front, President Trump has signed a new executive order focusing on advanced AI innovation and security.
Looking objectively at its primary provisions, the order establishes a voluntary 30-day pre-release review process for covered frontier models, meaning it's relying much more on industry cooperation rather than prescriptive regulation. It explicitly prohibits mandatory federal licensing, aiming to avoid hindering U.S. competitiveness. Lastly, it directs the Department of Justice to prioritize the criminal prosecution of malicious actors who use AI agents to commit cybercrime.
Which brings us to our final section, the analyst's take.
When we step back and connect today's data points, OpenAI's government-gated rollout alongside Anthropic's brief export freeze, we're observing a very material shift in market dynamics. Industry analysts are now characterizing this as the dawn of soft nationalization. Essentially, the absolute frontier of advanced models is transitioning from being a universally accessible commercial product into more of a state-rationed strategic asset.
That shift poses a critical question for corporate leadership. How exactly will enterprise procurement adapt when frontier AI access is suddenly subject to geopolitical intervention? Supply chain continuity isn't just about cloud uptime anymore. It is now directly tied to national security policy. Moving forward, enterprises absolutely have to factor sovereign risk into their operational architectures.
As we look ahead to Google's delayed rollout and those impending IPOs, the broader market is watching very closely. But the underlying question remains. As these models become categorized as national security assets, will the next great AI breakthrough belong to the open market, or will it be classified before we ever even see it? Thank you for joining us for this explainer of today's market events, brought to you by bestai.org. Be sure to visit our sponsor for further data and industry resources, and we'll see you next time.